Got a lot to cover here as we welcome you into the cathedral, Daniel, of financial information. Welcome to another edition of Your Money Radio. Danny Stewart, Don Vandenbord, Hunter Mozingo, Alex Caduceus, I'm Tim Reazor. Our illustrious producer, Zach, is with us. Now, listen, there's a lot going on in the world these days. And normally I have something to bring you into the tent. It's a little funny, a little humorous. Some people don't like the humor. I'm not going to lie to you. Some people, shocker. Some people don't care for the monologues. And so what I've done is I've managed to just stall here for literally 32 seconds to agitate the one person that keeps sending me emails. But that's just me talking to you. You know, the best part about the show, Daniel, is when someone writes to me and says, they address their email as if I was talking directly to them. Mm-hmm. And I think that is really why you send your kids to the Connecticut School of Broadcasting upstairs from the CBS and, of course, Stamford, Connecticut.
Yes.
Because they teach you to come through the microphone. And we're just having a conversation, you and me. We're talking about serious things in the marketplace and serious, non-serious things to start off the show. And it's a legitimate question. I usually don't go down this road because, as you know, Daniel, I like to avoid. I don't think that markets or our show should be controversial in any way. Like the markets, I believe, and you believe, and Don and the fellas believe, the market has to we have to transcend politics. Mm-hmm. We have to transcend news because if you get caught up in, to give you an example, who's the knucklehead? By the way, you can only say knucklehead like Charles Barkley says knucklehead. Knucklehead. Which is the best way to say knucklehead.
You gotta roll it.
Which is, by the way, how I've gotten Remy to not curse in the car with me because he's heard me say curse words when I'm taking him to daycare.
Oh, that jar's full?
That jar is very full. And so here's the thing.
It's funny.
Yeah, well, it's not when your wife is yelling at you about it. So we're driving, right? And everyone's a bad driver but me. Now, I've got Remy telling me.
That's right.
I've got Remy telling me.
That's funny if you've seen Tim drive.
They're all bad drivers, right, Dada? I'm like, yes, they are,
Sure
Remy.
are.
And then, like, I was cursing when I would address the other drivers. And I'm not an angry driver. I'm just like, you blooded, And then Remy, I caught him repeating. I'm like, no, Remy, those aren't Remy words. And they really shouldn't be my words either. So let's figure out what we're going to call these people. And I just let out with knuckleheads. And he goes, yeah, they're all knuckleheads. And so anyway, we came up with knuckleheads.
It's a good one.
Yeah.
That's good.
That's what I'm talking about.
Yeah.
Anyway.
Now he's going to start calling his siblings knuckleheads.
No,
Right.
that's a car word for just me and him.
Okay.
But he is allowed to tell Tanya that I am the best driver he's ever met. That we did cover ad nauseum. Yeah. I've got
How much did you pay him?
outside of Dan.
Yeah, outside of Dan. Because
Don, you really need to see Tim drive.
No, I really.
It's amazing. He can fly a helicopter, but man, the car on the ground gives him
no cars
trouble.
up there,
Really?
man.
That's right.
So anyway.
There's traffic up there.
So the show transcends politics, and it transcends, like, who's the knucklehead, how I got on that tangent, who tried to short Tesla recently? The guy from The Big Short. I just forget his name.
Michael
Burry.
Michael
Burry.
That's who wrote that.
Michael Burry? Michael Burry?
What is his name?
Burry.
Burry.
Burry, I believe.
Shaka Khan. Michael Burry. And so, what a knucklehead. Like you can't and that's the whole thing, right? Like when you start intermixing opinion, right? Which a lot of politics is opinion, right? Mm-hmm. And a lot of short thesis is what, Daniel? Opinion. And they try to sway you. And like Michael Burry comes out with what a Michael Scott type PowerPoint presentation on why you should be shorting Tesla, only to get his ass handed to him. And this is the thing, like how many people do you know have ridden one good season like into a 10-year career that's meant nothing? Now, Michael Burry nailed it, right? But a lot of people don't realize that Michael Burry, knucklehead, absolutely almost bankrupted his firm along the way.
He stayed the course and held to his guns and made billions.
So let you in on an insight, stock nerds and market lovers, and I love you dearly, and I want you to be able to explain to your spouses when you're in a trade and it's not going the way you think it should be. Here, I'm going to give you the code. I'm going to give you the word that you should use when talking to your loved ones about the trade that isn't going well and why your kids can't go to Wellington Prep Academy anymore and they're going to schooonthecorner.com. We're early. You say those two magic words, we're early. Because you can imagine the
So
need.
you don't say, oh, honey, don't be a
No,
knucklehead.
no.
You don't say, oh, honey, don't be a knucklehead.
No. You don't say honey, you never let in that you're being a knucklehead, that you're being a stubborn knucklehead. Michael Burry was a stubborn knucklehead. There were multiple times he could have gotten in that trade after he got in, but he didn't. He had a thesis, Daniel. And I've known, and the road in investment heaven is investment heaven's next to dog heaven, by the way. Well, depending on who you are, maybe it's in hell. But investment heaven is littered with the arses of people who have been early. Okay, but investment hell is littered with different things, which brings me to Dave Portnoy.
Oh no!
And so. Oh no! It doesn't.
We really got to get a mute button.
Yeah.
I have no idea where this is going, but I'm afraid.
No,
I'm
you don't
very
know.
afraid.
Dan
Be
doesn't know who
afraid.
Dave Portnoy is.
See now
Okay,
what I did
Just
there.
don't make
Stockner.
Zach edit a bunch of stuff.
No, we don't pay for that. And so
That's right. You don't.
Here's the thing that you don't know, stock nerds. I'm pretty sure I have to pay for every Zach edit from now on. So we don't. We do the show one take.
It's right. One take show.
One take show.
Every time.
Everybody knows the rules.
It's
One
live,
take.
man.
It's a
It's
live
live.
show. Yeah, by the way, that is exactly true. Wherever you're at, wherever you're listening to us, however you're listening to us, we are live right now with you.
It's live.
Yeah.
You know, it's also live right now.
What's that?
As of 2 p.m. Eastern Time,
The Dave Portnoy
Portnoy's
press conference.
Exposing
Don't
Henry Blodgett.
Don't.
Don't steal
See, that's what
Tim's
happens
thunder.
when we don't discuss what we're going to talk about on the air.
Hey, can you pump Don? Can I get the volume?
Yeah.
pumped down
Let me
in
play
mine?
with that. Yeah. I'll work
So, I need music on the monitors, please.
Yeah.
So Dave's having a press conference, right? Don alluded to it, and some allegations have been strewn across the investment galaxy.
Shot across the bow.
There's been some shots across the bow, and I don't want to get into whatever transpired on what would be the surface news there, which is very big, by the way. Mm-hmm. Not really. I mean, it's whatever it is, it is. What I do want to get into is what Dave has alleged and shown some interesting proof of, but it needs verification, and that is the front running or the buying of puts that for the week, the day of, for the week where that story was released. And that to me is really the interest. There's multiple facets. I want to be really careful here because the story, the story itself may or may not be troubling, may or may not be true, and that's not what I want to get into. What I do believe is a very valid discussion point for our show just for a moment, is the obligation or the wonderment in my mind are, I'm going to use air quotes, journalists, people that write stories. Are they front-running their own stories when they write about public companies?
And Business Insider does write about stocks.
It's called Business Insider.
And they write about stocks.
Wouldn't it be something if Business Insider, run by Henry Blodgett, got busted for insider trading? How many people in Business Insider? Now, I'm not coming to. This might seem like, Tim, you're attacking Business Insider. I'm actually going to go across the spectrum here, to New York Times, to even Wall Street Journal, to all news, anyone who writes about business. Because listen, folks, there's no regulatory system in this country to prevent it. There's regulators. But what stops the author of the story from sprinkling 10 puts? You know what? I got $1,000 here.
Well, can we give a little of the background so people don't? All I'm saying is, so they were running a negative story.
They ran a negative story about Dave Portnoy.
Dave Portnoy, but then they allegedly shorted before they released it.
Well, they don't know who did it. That's what I want to be careful.
Right.
Yeah. And so
that's what he's alleging.
That's what he's alleging.
Dave Portnoy,
yeah. And that's why I want to be careful here, because there's only going to be a few people who know that story's running when it's running. That know, unless she's telling her folks, unless she, and I mean by her folks, her parents or her siblings, or what's to stop if you've got a hot scoop, right, and you're not paid very well or paid what you think you're worth, Why shouldn't you make a few extra bucks on the story? Could be the thinking.
Or you're simply just trying to make lots of money and you already got some money. Doesn't matter whether you're rich or poor. It's, are you insider trading?
So the whole thought process, it was like this. I find what's happening, and I'm wondering if one of the fellas is monitoring the Dave Portnoy emergency press conference. Whatever the salaciousness, that's a whole nother angle that it does not interest the show right now. But if he gets into the insider trading, that part I am very interested in.
Very much.
And here's the thing that a lot of people don't realize: your tracks are everywhere, stock nerds. When you go in and play, especially with these options, like it's just obvious because it's human nature. And as you know, Daniel, I say investing is 90% psychological, and that psychological part is often greed. And so what'll happen is the person who has a tip will go in and buy the most outlandish call, or the call that has, how calls are measured, Daniel, is by delta. And that delta tells you pretty much the percentage of chance that call or put has of working. So if you buy a delta, like a delta 1, that's 100, like 101, right? But if you buy all the way down the scale, like delta 70, and you keep going down, like if you buy a delta 2, it's a 20% chance that it's going to work. Like that. So whatever, and they price them out of the money, right? The lower the delta there, the higher probability it has of that trade not working. And by the way, it's the market makers who set that. They can be wrong, but they're kind of the insiders themselves, right? And so they kind of know how to price these things. That's why outsized moves get such big news coverage, because it doesn't happen, quote unquote, so often.
Anyway, this is the same Henry Blodgett that's banned for life from the securities industry for recommending stocks as an analyst at a brokerage company while simultaneously calling them pieces of garbage.
So Don
in emails.
Pump and dump. Yeah, he was pumping.
No, he was.
Retail investors. He got caught red-handed. His own emails
I don't think he's dumb enough. I don't think Henry Blodgett is dumb enough
to do it again.
I don't. But that doesn't mean that someone in that chain at Biz. I don't think Henry Blodgett. If you said, Tim, do you think Henry Blodgett committed some kind of insider trading? I don't think Henry Blodgett's second crack at he's going to go to prison if it happened.
No, I would agree with that.
Yeah, like he's not going to give up his wife, his family for this.
For Dave Portnoy.
No. No, he's not. And so that's my opinion. But do I think somebody inside that circle who knew when that story was going to run did something?
Potential. It's going to be interesting.
Oh, I believe that. I do believe that. And there. So what I was getting to is that your tracks are everywhere, stock nerds, when you buy calls and puts. And they will get the warrants to go into the brokerages and figure out who did the buying.
They're getting an options tracker.
And so when you sign up for an account and you provide all your Patriot data information, because that's what you have to provide to have an account here in America, there ain't no criminal going to get there's no stone unturned. It might take a little bit until they get the proper warrants and the proper investigative authority is finally alerted to this. But you will be caught, and it's never worth it. It's just not. But the thing is, if you didn't do it egregiously, right? Let's just say you sprinkle in like 5 or 10 puts. That's not really that big of a deal. But when you do 100, like you've never.
We're just going to inside trade a little bit.
Yeah, well, no, that's what I'm getting at.
It's all a matter of degree.
You can't.
Well, we know what you are. We're just haggling over price now.
Danny knows me. I think cynicism is a disease. I think if you choose to live your life as a cynical person, eventually it just grinds you down and it wears you down. And it makes life, quite frankly, in my opinion, unenjoyable. Now, so I am cynical, though, about this issue because there's no regulatory authority that's deep enough here in America that's going to come in and catch the spouse, the brother, the father. Oh, what story are you working on there, son? Oh, I'm working.
No, I don't know about that. They pull family members' accounts. They audit their accounts. When they audit me, the first thing they want is all employees and spouses' accounts.
We're a different story. We're not writing hit pieces.
Yeah, but if there's insider trading accusations, the first thing they do is they think you're not dumb enough to do it yourself, so they go to your brother, your brother-in-law, your mother. Let's
use the Journal of the New York Times in this example, right? There's going to come a story out on Hertz or Wynn or something, and it's just in passing where, hey, son, what story are you working on? Oh, Steve Wynn's got some salacious allegations. The son might not even know, the daughter might not even know that the father or the mother went and placed those trades, and that's kind of what I'm saying here, Daniel.
Yeah, no, I get it, but they're still on the hook for it. Doesn't matter
if they ever get caught. Yeah. And the 5 or 10 calls or puts will never get caught. But when you buy a boatload, a gazillion puts that clearly have, for that week, because they have weeklies on Penn, that clearly have no chance of hitting before the story hits. Oh, now you've left bear tracks. And so I think that part of the story is extremely interesting. And it really got me thinking credibly. Now, do I want to believe we have a journalistic media? And by the way, journalism has changed. The democratization of information as provided by the internet has allowed anyone to be a journalist. But before you go, well, just anybody can be a journalist? Hey, listen here, folks. Anyone could have been a journalist before. The club was just much smaller and exclusive. See, that's the difference, right? It was ABC, CBS, NBC. But now, when the internet democratized things, what the hell is Yahoo News? Yeah, and it allowed more places to become news sources for folks, whether you like them or not. And so anyone could have been a journalist before. There's no special test. Like, you have to pass the bar to become a lawyer, right? Mm-hmm. By the way, I got a lawyer story for you. Mm-hmm. The Car Crash King. Saw a billboard for that this week. And let it be a Marine who is the Car Crash King. So, like, the Texas Hammer is the guy on the billboards, I'm the Texas Hammer. And, like, and then you've got the Law Lion, right, in Dallas. And then you have the Law Boss in Dallas to see those billboards. Strong arm of the law. And now see the Marine, like, this is the beauty of Marines. First off, Marine Corps, we don't have doctors. Marine Corps birthday, November 10th, yesterday. Veterans Day, by the way. On the 11th day of the 11th hour, we celebrate the people that provide the freedom in this country. And, oh, by the way, it's such an important observance. So does Great Britain. So does France. The free world celebrates the free people that they are. And it came out of Armistice Day of World War I on the 11th day, at the 11th hour. And what we're discussing right here, folks, is absolutely all about freedom. Now, I go back to the Car Crash King. So the Marine Corps, we don't have doctors, right? No, the Navy can do that. No. We have lawyers. We want our own legal representation because we are going to get into some trouble here. And so let it be a Marine to out-Trump. Tongue-in-cheek reference, to out-Trump. To out his billboards are brash. Like, these things are obnoxious.
I got to see one of these.
Yeah, the Car Crash King.
All right.
He's not the strong arm. He's not the law boss. Screw you. I'm royalty. I'm a former lawyer in the Marine Corps, and I trump you all. In a wreck, call me. So I now support the Car Crash King. I did like the law.
So Tim's got him on speed dial.
Yeah. I am now a fan of the Car Crash King. I don't even know but if he represented Marines in a court of law, you want him on your side.
We should have him calling in the show next week.
The Car Crash King?
See if we can call him up.
Oh, my gosh. This guy, if he was a lawyer in the Marine Corps, there isn't a lawyer in the Marine Corps alive that doesn't have the best stories. Matter of fact, I'll tell you one right now before we get back to Henry Blodgett.
All right.
And then we've got something about tips. But I'll just give you the tips now, Danny. So on the Car Crash King. So there was a major. I think he's a full-bird colonel now. When I knew him, he was Major Piggott. And I went on my first float with him and my second float with him. I think I went on 3 floats with this guy. He was attached to the MEU, the Marine Expeditionary Unit. And so Bill Piggott, just a great human being. I learned so much smoking in the smoke pit with him. smoking cigars after flights or hours. He was just always around, and that's what a good lawyer does. Just always around, right? Hawking for a Marine in trouble. And so we would take Major Piggott out on flights with us. And like finally, like in one of the smoke pit sessions, I'm like, "What are you doing down there, Judge?" We called him the judge, right? Every lawyer in the Marine Corps is the judge. "Hey, Judge, what's going on?" And so I said, "Judge, what's going on?" He goes, "Just paying off people." Do tell. He would walk around the villages with the sheikhs and the mullahs in the Al-Anbar province, like the whole Al-Anbar awakening, right? So we go in there. The Marine Corps is a conquering force. The Army is an occupying force. And so the Army had gotten sideways on western Iraq from the middle of Baghdad to the border of, not Korean village. We just named it the Korean village, but it was really Syria. And so to the border of Syria was Marine Corps, like that we gave it back to the Army, we conquered it, and now the Marine Corps is meant to go on shore, conquer, and then get out.
What year is this?
This has got to be 06, 07.
Okay.
Yeah.
All right.
And so it was when this George Bush did the surge again.
Okay.
Yeah, so that was like my third pump there.
Yeah.
So we take the judge somewhere and we're smoking afterwards. What you doing down there? Paying off people, man. What you doing? Like they're literally going village to village, just paying off. He would walk around to every mission with $100,000.
Wow.
Just cash.
Wow. Well, yeah, they don't take credit cards.
And they don't take American Express. And so he would just, the whole Al-Anbar awakening, like the war had turned against us kind of, but then like after the surge, it kind of turned back in our favor because Western Iraq fell back into coalition hands. Mm-hmm. And that coalition, that big, like, militaristic adjustment made was we paid them off. Yeah, it's fascinating. Anyway, wow. So is there insider trading? So I'm going to say that every day in America where there's a business story written, you should look at it with some cynical eyes. And you should wonder, was the piece written like...
What's the agenda? And
so it might not be that
who are the
by
advertisers?
The way, I think there could be a great movie written by Hunter and Alex here. The two of great, like the Matt Damon and Ben Affleck of our time, or Alex Katutis and Hunter Mozingo, right? They're swingers. And so...
Wow.
and you would be Ben Affleck's dad?
Was that
What's
part
his
of
name? What's his name?
Ben Affleck has a dad?
Yes, he's an actor too.
What?
Mr. Affleck.
Yeah.
That's the duck. Jesus, Dan, did you get Ben Affleck confused with the Affleck duck? That's Gilbert Gottfried.
No. I think
his father really act? I didn't know that.
I didn't. I literally think Danny just made
I
up.
think his mom and dad are both actors.
Maybe a little nepotism carried into him in the
said that?
Hollywood.
Maybe I got it confused with somebody else. I thought his mom and dad were both actors.
It might be.
Did you get it confused with the guy that played George Costanza's dad?
Ben Stiller's father.
Yeah.
Oh, Ben Stiller. Never
Yeah.
mind. I was thinking Ben Stiller.
I'm a little. The fact that
Now Don's laughing. That makes sense.
Yeah.
The fact
We
that I picked,
need to set up a term, Danny Facts.
Yeah.
There you go.
Not accurate.
I legitimately can't believe I picked off in Danny's brain what he was thinking. Like that's the story here.
I'm not glued to the TV all the time. I'm doing stuff.
That's right.
Okay.
You're watching the charts.
Right.
He's out working.
Look at Zach.
Yeah.
That's a company man
the
right
rest of
there.
you are watching film. Danny's hustling. All right.
That's a company man right
That's
there.
right.
So
Pulling out the Christmas sweater before Thanksgiving.
So I think the story here is what happens. I believe this now. That, and maybe I'm too cynical when I think about it like this, but I think people are. It's pay to play. You don't. Hey, do you think? Let me take you to dinner and give you a story idea. Right? Says hedge fund owner.com or bigwigtrader.com and takes Cub journalist out to the Piggly Wiggly restaurant, right? Or the where did they go on Three's Company? What was the room? They went to the restaurant. It's the only restaurant that Larry, Jack, and the
Regal Beagle.
Thank you. You take them to the Regal
Wow.
Beagle. I
Good
knew
pick.
somebody.
Oh
would
my
know.
God! I can't believe you guys
good
know
trivia.
that.
Yeah.
That show
So-
was terrible.
So they take but our show is great. So they take
Where
the
the
Cub
kisses are hers and his.
Well, that's why it's Three's Company too. So
Three's
they,
Company too.
which really is just never mind.
Yeah, keep going,
So-
Don. Don't let him take left.
So They go to the Regal Beagle. It's like, hey, I got a story idea for you, cubjournalist.com. Oh, what's that, hedgefundmanager.com? Well, I heard this, and I heard this, and I heard this. I bet you get some eyeball clicks. So I will tell you that my scant research for this whole epiphany of, I believe journalists are potentially insider trading here. It's interesting how people are paid in journalistic world, and how, if you want to see it, it's actually on Dave Portnoy's timeline about what you have to generate to actually make your keep at Business Insider. It's like 1 million page views per month to pay for your salary and your benefits. And so, well, how do you generate enough page views to pay for your salary?
Got to create some sizzle, baby. Got to create some sizzle.
Yeah, man. And
if
so
the facts don't support it, well,
and if you think that it's limited to just Business Insider,
no.
May I introduce you to Mashable? May I introduce you to Wirecutter? May I introduce you to anywebsite.com? That's if you're a freelancer and you want to get hired on or you want to get paid, you better be generating page clicks. And so whether this happened in this case or not, it really does lend itself to watch the charts. The charts are going to tell you the true price, what's really happening. And you don't have to get into an argument, a proverbial he said, she said about a stock like that knucklehead that shorted Tesla and got his catutus handed to him. And so
Tim, your audio just got really loud in my ear. I don't know if Zach needs to know that or not.
Sorry.
Or if I'm the only one.
It was fine to me.
Yeah.
It was fine on me.
Hunter, Alex, you guys all right?
It was all good.
Fine on my end. Got loud for a split second, but went back to normal.
No worries. So I find that whole thing that's unfolding in front of our eyes right now, and I believe this, and we are typically, and I'm not being facetious when I say this, like we talk about things on this show before they really become mainstream. And we've got a habit of doing that. And I believe this is the first thread being pulled on some kind of, I think by the time we're done with this story, like when it's all said and done, there's going to be some mechanism put in place where some source is going to say, hey, we don't allow our people to trade stocks and we audit. Like I believe there's going to be something that comes out of this if it's true that there was front running. And look, the 9/11 terrorists, a lot, they figured out, and credit to
tracked them down with options.
The credit to the Nigerian brothers, Pete and John. Pete, and I only learned this because I was watching Pete and John talk in person. I was teaching with them in maybe Washington D.C. and we were talking afterwards about what they had presented. And they're like, yeah, that like the feds
they told me the same story.
Yeah, the feds asked us for our data and we handed it over. And so they've been able to track your movements in the market forever. So if you're out there and you do have, let me just throw this out there and you're listening. Speaking of listening, it's interesting to me. I thought once we went to video, the video podcast would just be like snappy snap and our numbers would go. It's actually the audio. The audio is racing. I mean, light years ahead of the video. Interesting, right?
Well, yeah, very.
I think people like being able to listen in their cars.
Well,
I think
yeah,
so.
well, that's
yeah.
easy use, but I think the stock nerds still watch it on the video because they can see the charts.
Yeah, I find that the audio is growing like tremendously. It's pretty interesting to me. Anyway, they're going to track you. They're going to find you, and it's not worth it. Whatever the amount of money. Listen. It's just not worth it. And who knows what comes out of this. But look, the real story this week isn't what I just got you into the door with. The real story is there's negative yields in America. And so what I want to get to here with Danny real quick, I'm just going to Danny, I'm going to give you a couple of questions.
Okay.
I do not want, listen, no, we need to make eye contact. I bailed you out knowing that you were thinking about Ben Stiller. I need you not to elaborate.
He owns tips. Go ahead.
Go ahead. All right.
I need you not to elaborate. I need you to be the straight man, okay?
Okay.
Just for a minute.
Okay.
Danny, what do people think bond? What does the majority of Americans, what do they think bonds, whether they're savings bonds, government bonds, corporate bonds, what do they think bonds are for?
Safety and income.
Income. How?
Interest. You pay interest.
So
you're loaning money. You're lending money to a borrower, generally in $1,000 increments. Now tips are $100, and Series E bonds are $100 increments.
Right.
But they've got a stated rate on the bond.
Right.
A stated rate on the bond, and they pay interest. So if you've got in the old days, just 5 or 6 years ago, the stated rate on a Treasury bond might be 5 or 6%. And you'd get 6% on $1,000 or $60 a bond if you bought it at par when it was issued. Okay. Tips. You may go into tips or not?
I'd say because you mentioned it. Just tell me what tips are for.
Okay, so tips are to do bonds, but help you with inflation in case there's inflation.
The P in tips is protection, right?
Yeah. Treasury inflation protected securities.
Treasury
inflation protected securities.
And you would own tips if you wanted to make sure that you had some income coming in against
that you were protected. Well, you were getting income, but also protected in case there was inflation. Because inflation is bad for bonds. It's kryptonite to bonds.
Right. Okay.
It's worse than rising rates.
Okay. Now,
as far as price,
most true or false, and now this is the way I'm about to ask this isn't fair. It's how I'm about to ask this is a leading question.
Bring it on. Lead with a chin.
And you're not supposed to lead the witness, but I'm going to lead you here, and I'm telling you in advance.
Okay.
Do investors buy bonds in their portfolio for price appreciation?
No, not you. Well, retail investors don't. Bond traders do, but retail investors don't.
The people that we're talking. We're talking the stock nerds and market lovers.
Right.
So now let me tell you something that happened, and I didn't realize this when it happened. But when I started doing some research this week, and I'm like, oh my gosh, this is amazing. There are negative bond yields in America right now. And I had no idea, and I felt dumb about it. Like, oh my gosh, how did I not pick this up? And so let me show you this, Daniel. No, on my screen here. I did a real simple Google search when I saw something about tips. And so you want to know how my research starts, stock nerds, like real simple Google searches. Do tips have negative yields? Okay. That's nothing too shabby. And then you come up with this. Most tips are negative today. Say what? Like the thing that's supposed to protect you against inflation. And it does that with yield. It does that with an interest rate, right, Daniel?
Well, in theory, yes.
Theory. Remember theories, Daniel. Like you go back to the beginning of the monologue. You see, I'm doing Connecticut graduate magna cum laude, and so what I did was I talked about theories at the beginning of the show.
That's why I said it.
Yeah. Then
I was paying attention.
You're so full of it. Can we discuss how lightning can come through a brick building and strike you right where you're at? Oh my God. Even I know that wasn't true. And I can't pick up sarcasm. Are negative today. And so in theory, they're supposed to protect against this. But while that might surprise many investors, consider the nominal yield, see this right here, the non-inflation protected is the same thing as some pencil dweeb economist, Austin Goolsbee, telling you that inflation isn't bad if you just take out energy and food.
Yeah.
The things that
it's transitory.
Yeah, the things that you use to get to work and sustain your family, and that thing that you use
to live,
to heat your house, to keep your family alive. If you take out those things, you know what? You're not anemic. If you remove the blood from your system, there's no iron deficiency. It's ridiculous. The non-inflation protected, the nominal yield of these bonds is 1.5%. This is why people don't like economists. That's why economists don't make good lovers. That's why you've never read a good story like The Romance of a Great Economist. That's why there's no story in the history of the world where the hero economist, where the economist gets the girl at the end and they go on and make a lot of children. Because they say things like nominal yield. Because you're at dinner with an economist and the kid will say, Daddy, I got an A on that test. Well, the nominal grade really was a C- because you got X wrong, but they graded on a curve. They're the wet blanket in the room. The economists are why wives go on Ashley Madison. Because they're nominal. Because they married nominal men. You need food and energy to survive. We need to remove this language. I'm being absurd so you understand that it's not worth it to you in your world to consider the nominal. It's what's reality. You know, I flew helicopters. It wasn't nominally flying. It either was or it wasn't. Nominally, we're doing a great job. We're dying.
We're headed toward the mountain.
There's a mountain in front of us.
Let's clarify something real quick. What you're saying is that a TIP, the bond ETF, has a 3.5% yield and inflation is 4%. So its implied yield, inflation adjusted, is negative. I just want to be clear that that's what we're saying.
And I appreciate that. And let me read you this. And then.
So you get the yield. It's not like they take money from you.
Thank you.
By saying it's a negative yield. It's just that what they're giving you is less than what inflation.
Well, let me jump in real quick.
Well, I want to read this. I'm going to make your point, and then you can have it all. I swear.
You're going to steal my thunder?
No, this is
not.
It all. I don't think we don't talk before the show. I don't think I'm about to steal your thunder.
Go ahead. I'm teasing.
Oh, okay. Bondholders are. Okay. So by the way, what I just quoted you from, and I didn't give the punchline. What I just quoted you from was June 24th of this year. I wish I would have picked this up this summer and realized this. I didn't realize it. Now, what I'm about to read to you is from yesterday, Marine Corps birthday. Bondholders are increasingly willing to be paid less than nothing in the U.S. Treasury market. With consumer prices rising at the fastest pace since 1990, so-called real yields on U.S. government securities, or the rate of inflation is taken into account, have dived even deeper below zero. The rate on
that means a loss.
Yep. This is the last sentence. The rate on 30-year inflation-protected securities, a measure of real yields over the next 3 decades, dropped to a record low of around minus 0.62%.
Okay, so a couple of things. The problem I have with TIPS is over long time periods, regular Treasury bonds actually outperform them. Right? Because during deflation or whatever, they go down, number one. Number two, you actually, when they ratchet up the principal amount to calculate your interest, that's a lagging. So they look back, they look at the end of the year, they go, oh, we had inflation, let's increase the principal amount. So the increase in interest happens a little bit after the fact. It's got a little lag, number one. Number two, they're understating CPI. Even though it's 6.2, it's understated because they manipulate those. Like you said, they don't include food, energy, the stuff you really need. Okay.
Well, the CPI, the 6.2 is actually with food in there. This one that got
that's yeah, but still, they still manipulate the day. They went from steaks to hamburger and they call it meat because steaks went up so much. They still manipulated. So CPI is understated. Sure. If you look at your inflation, I mean, I know my inflation's running about 10%. I mean, it doesn't matter what. Just comparative what I buy and when I shop.
I was just wondering how you figured that out. That's all.
I'm looking at my daughter's school. I'm looking at my daughter's college.
Don't take my head off. Jesus,
no.
Danny.
I'm just telling you.
Where'd you go from beef jerky to Slim Jims?
Look, I could do a whole show on how they manipulate CPI, and they've done it over decades.
Right.
Okay. In fact, they're talking about doing this chain link CPI.
What's chain link CPI?
I don't want to get into it here. I'll just trust me when it's going to understate CPI.
Okay.
Because then they don't have to pay as much in Social Security benefits and everything else.
Right.
But the whole point is, they're talking about, hey man, this Social Security, you're going to get this big bump of 5%. CPI is 6.2. You're still getting a loss.
And to give the listener, just for 1 second, an example of how far inflation went in a month. Inflation was in the 4s when released in October, measuring September. It skipped the 5s. It went from the 4s.
Well, last one it was 5.2 last month. 5.4, excuse me, 5.4. Now
I thought it was in the 4s.
5.4 and then 6.2.
Okay.
But even that difference, that's like a 20% increase. The rate of change is accelerating. So it's accelerating and going up. So, and by the way, PPI that just came out a couple days ago, the Producers Price Index came in hot. So this CPI, the 6.2, doesn't even have the PPI built into it. It's still going to go up. It's still headed higher. That's the problem. So here's the other thing, though. It's all about the bid and ask. It's all about the price. So they've got this fear, and everybody thinks these tips are the cure for regular treasuries or regular bonds. So you've had people rush out there and buy a bunch of them, and they bid up the price. That's one reason the yield is so low, because you got people bidding up the price, and therefore, because the more you pay for a bond, the lower the yield.
Right.
And that's the problem. So it's got a couple structural issues with the way they design them, in that it's a little bit lagging catching up that inflation. Number one. Number two, when you have periods of inflation, the fear bids up the price too much, so the tips don't really work how they were designed. And then during regular times or deflationary times, they actually get hammered. Last year, they got creamed during the COVID time in 2008 economic crisis. They got creamed. So they're definitely not something you want to buy and hold with. But they're just not a good investment. And by the way, bonds, so you remember we talked about 60-40, how the 60-40 was dead. We talked about this months and months ago. And now you're seeing all these stories this last month come out about how 60-40 is dead. You got to find a different way. Now what the brokerage side, the sell side, is trying to convince you of, because they still got to sell bonds. They still have them in inventory. They still got to sell them for governments and corporations, which is their client. You're not the client. So now they're saying, well, the 60-40 is kind of broken. You really need to do 80-20. So they're saying they're bad, so let's just cut up that position in half. Well, if they're so bad, why don't you just not own them if they're not going to do well? But right now, bonds are extremely dangerous because, like I said before, inflation is kryptonite to bonds. It's worse than rising interest rates. And in the mid 77 to 79, Treasury bonds lost 32% of their value. Price, Treasury bonds.
Because yields.
Because inflation.
Right. So let me just draw that. We get a lot of new listeners. I want to make sure that everyone's on track here. So when bond prices, and I'm on my screen drawing, folks, real simplistically, when bond prices go up, yields typically come down.
They move inversely.
But when bond prices come down, yields go up.
Right. Now, when you get inflation, you'll get sellers of bonds because now their interest payment, their fixed interest payment is worth less. So fixed interest payments, annuity payments, Social Security payments, which is why they got to ratchet them up, is worth less when you have inflation, high inflation. Yeah. So when you have high inflation, that will actually precipitate bond sellers, people selling bonds, which then drives the yield up.
I think was it yesterday? It was yesterday. Maybe it was, you know what? I think it was yesterday. It really wasn't the initial CPI number that sank the market at first. It was the bond auction.
Didn't go, yes. It was unsubscribed. It didn't get filled.
So that means that, so just in lay terms, there were no buyers. So they didn't, the government auctioned off some bonds and people said these yields are not
nearly high enough. And that's the takeaway. What I'm telling you folks, bonds right now are riskier than stocks. Mm-hmm. That's not what you're going to hear most places. They'll tell you, oh, bonds are safer than stocks. Well, most of the time, but there are time periods where they're just as risky or more risky. And with the Fed taking interest rates to historic lows, right, and now you're having massive inflation because of the money printing and the interest rates near zero, nobody wants bonds.
And you can see that on my chart here on a 5-minute scale. That's the bond auction right there. Prices came down because nobody wanted them, and yields just shot up. And it really put kind of a shock into the market, especially tech stocks because right, wrong, or indifferent, it's considered that earnings are worth less when you have inflation and your future earnings are worth less. And a lot of these tech companies is believed.
And if interest rates rise, the cost of money, the cost of capital goes up, so it costs them more, so that it reduces their earnings.
Exactly. And so all of this dynamic, comes back to, well, what do you do? Like because if you have a theory, right, that doesn't mean you can just, for us, and I think for stock nerds and market lovers, you just don't want to act upon it. Like, should you go out and sell everything like a hell in a handbasket? No. There's rules to all of this, and you got to. But having the heads up, like just to put it in context here, and you don't have to. This is what we do here, Daniel, is for what? Edification purposes only, never ever to be misconstrued as advice. But like when you get for me, like me, okay, this works for me. Like here's the TNX before it starts sliding as a daily chart. And what did the market do? Market's been really strong, especially tech. But let's look at NQ here real quick. We're on a daily chart. So NQ starts riding the rail, and it comes up to this third ATR. You have to, even if you don't understand anything that we talked about, or you don't even care, you're like, Tim, I don't care about any of this inner workings of this Economist stuff. You're right. Economists get no love. They're never the heroes in any of these action movies. I just want to know what the charts are doing. Great. Well, okay, you should suspect that this is going to pull back. It doesn't matter the reason. And that's kind of what I'm driving at here. Like what Danny just talked about to me is fascinating. Because my next question to Danny is, what's the 64 what is the purpose of a 60-40 portfolio, 60% stocks, 40% bonds, if this is what's happening right now? And why are you still being sold this bill of goods? Why is anyone telling you to buy bonds right now? And it goes back to the old adage. What do you say, Danny? Buy bonds.
When do brokers push bonds on people?
When do they?
Simple. When they have them in inventory. When do they have them in inventory? When interest rates are really low, when everybody wants to borrow money. Like you want to refinance your house when rates go way down. Companies want to borrow money when interest rates are way low, so they've got a bunch of it. So you're the cattle, he's the roper, he's the cowboy, and he's delivering you to market.
In this case, with the bond salesperson, or to put it to terms that relate to you, stock nerds and market lovers, and your families and your loved ones and your friends, stripmalladvisor.com. When Strip Mall Advisor from stripmalladvisor.com tells you that, hey, I've got some bonds for you that you should add to your portfolio, what that really means is one man's trash is another person's trash, and you shouldn't be picking up the trash.
We really need to get that website.
I just looked it up to see if it was still available. Is
StripMallAdvisor.com
actually available? We should probably just redirect it to the podcast.
We should probably just do that. Well,
Yes.
we're not the strip mall. Like, you know what? We would.
We're the opposite.
You set up a page. It's like,
Yeah.
Well, here's my
a satire page.
So how a
guy with a diamond pinky ring.
Oh my gosh, diamond
three-piece suits.
Let's do
back
this.
Hair.
Diamond. Who's the JJ Snuffington III?
JJ Snuffington. There you go.
Is the Strip Mall Advisor.
Yeah.
Like if anyone has Sirius satellite radio, Grant Cardone from tiredofmissingsales.com. And guys, just anyway.
JJ Snuffington.
JJ Snuffington III, and he would be telling you to buy like you need to. He what was the motto we came up with? We have a morning call, Don and I and Danny, and inflation's hitting advisors. Hey, how do advisors fight inflation? They charge you more. And just a bunch of nonsense like that, and then at the bottom of the page somehow have us as the
one of the stock nerds actually opened up a Twitter account with JJ.
That's right.
JJ Snuffington. That's hysterical.
I forgot that.
Go follow JJ.
And so, but
Snuffington.
here's where this all came from with Strip Mall Advisor and JJ Snuffington III. So we I want to be careful here.
Please.
Yeah, no. It's not insulting. We collectively know someone. And I'm going to use a number that's close to the truth, okay? That had 35 mutual funds in their portfolio when they came to us. That's like you at home being excited that you're going to go to the bathroom and there's 62 rolls of toilet paper in the stall. You only need one. Like the other 61 rolls of toilet paper do nothing for your enjoyment. 35 mutual funds in your portfolio is egregious. There's not enough stocks. There's more ETFs and mutual funds than there are
stocks to put them in.
Yeah, like the duplication is gross. The thought that somebody would sell you on the idea that you needed 35 mutual funds because you're paying. Here's the dirty secret about Strip Mall Advisor and JJ Snuffington. They're getting paid on those. So there's trailers on them. Like the mutual funds that were most likely in there are the house funds, the funds that if they put you in them, they get a turkey at Thanksgiving. Their family gets to go to the movies for free. Like there's bonuses and benefits and marketing fees. What are they called?
12B1 fees.
12B1 fees. The whole thing is kaputs, man. This is why I rail against the system. That's why I have zero loyalty to this industry. I've never had it. Like I would see the people. Listen, man, when they say you don't want to see when the sausage is made, go to a money show in person and hang out with the people at the booths. Like you feel dirty and you want to go take a shower. And I did it when I was at.
Well, do you remember what I told you when you were working for IBD? And I went down to the Dallas Money Show, and that's where I saw you.
Yeah.
Doing you were doing a presentation to about 80 chairs, standing room only, people all around. And like you said, these got these little booths with the black box thing, and they got 12 chairs, and 6 of them are taken, the other 6. And so I like what you were saying. So I said, hey, you ought to come on our radio show. We bonded, and you started doing the 5 at 5, whatever. And so we did that for about a year and a half. And you called me one time, and you said, hey, I'm working 48 hours, 48 weeks a year on the road. I really, for personal reasons, I really got to come off the road. If I wanted to go in the broker, this is what you said. If I wanted to go in the brokerage business, how would I go about doing that? And I said, Tim, first of all, I'm not a broker.
Yeah.
I'm a fee-based only advisor. That's an insult, but if you decide to go in this investment industry, you cannot work for a brokerage firm or a broker and be a broker, because that represents the sell side, and it will make you will be just disgusted, because you've always only represented the investor. You've only represented the buy side. You have to go work for an advisor. And that's what I said.
Yeah.
But if you decide to come off the road, give me first right of refusal. And so you call me about a month later and do that. But that's
true.
And that was his thing. If you had gone to work for a
brokerage,
even a discount brokerage firm, you would have been just pulling your hair out.
It's not for me, and it's not for my my being. So look, what else did you have on bonds?
Well, it's kind of basically you hit most of the points.
Yeah.
You hit the high points. We don't have to beat it to death. The whole point is bonds are very dangerous right now, unless you believe that inflation is just transitory and it's going to subside. Now, if inflation is going to stop right now and interest rates are going to reverse and start to head lower, then maybe bonds would be a good trade. I don't see that economically. I mean, we don't really talk a lot about fundamentals normally, but I'm a very good economist and fundamental guy. All the stuff that I'm seeing points to higher inflation, and more pressure on bonds, and the risk for that little bit of interest that's lower than inflation is not worth the juice.
And this is what the podcast is for. Like 5 nights a week. Look, Stock Nerds, Market Lovers, you want, just give me the red meat, Tim. Like, look, we get it, but there's also a group of people. Don't be so selfish out there. There's also a group of traders, if I can find my link, and if you pardon me the ability to do so. By the way, the ultimate insider trading is Robert Kaplan, right? Bob Kaplan, the ultimate insider. All the Fed, right? The ultimate business.
Well, I think Congress is worse, but that's me.
How fitting would it be if Business Insider really got busted? Like, just add Business Insider Trading. Just had trading to the name.
It's too perfect.
Anyway, listen, if you want just red meat, let's just give me stock ideas, Tim. Well, look, here's how we run it at Revere if you're new here. Hunter gives all the stocks that go up on days that end in Y. And then Alex gives all the stocks that go down in all the other days. So we have one doing stocks that go up, one doing stocks that go down. You just have to pick and choose the video, and how you do that is you just go Daily Market Insight, and then Don comes and gives a recap.
Wait, excuse me? I don't give stocks that go down.
And then Don comes up on a Friday, and he'll give you the recap of all that. So listen, at revereasset.com, 5 nights a week. This video is the sixth, or this podcast is the sixth piece of content we release, and then we dive into other things that affect the markets. Like we didn't even get to the dollar. Cover that in last night's video. I call it the Blues Brothers, right? Yields and dollar going up in tandem typically spells, a little softness for stocks. So you can go watch last night's video with Daily Market Insight. We never pull a video down. That's the beauty of what we do here. We never ever pull a video down. And so with that, so Hunter is now handling all the stocks that go up on days that end in Y. So with that,
Thursday ends in Y.
Well, that's okay. Well, let's get them on then. Thank God
you can't get anything by Danny, can you?
That's why we have Hunter on the show. Yeah. Star analyst Hunter Mozingo giving you all the stocks that go up only in days that end in Y. All right, Hunter, take it away, man.
Yeah, man. We do have some high flyers today. Tim, will you pull up SOFY today for me? SoFi.
Sorry.
I'm sorry. I may have said Y there. Sorry. So we got a lot of gap ups today, a lot of earnings. I do have the video tonight, so I'm going to be talking about some more of these gap ups today as well. But these are three of the better ones. SoFi has faded a little bit here in the last hour or two. However, you're up about 15% here. This one, like a lot of the ones that actually gapped up, had a pretty nasty sell-off right before earnings and then has now gapped up after. So SoFi up about 15%. APP is the next one, Tim, AppLovin.
AppLovin?
This one also, AppLovin. It's very McLovin is what I think of every time.
That's right. That's what I think of too.
What did you say, APP?
APP is AppLovin. But I think of McLovin right away. And
a great character, truly. But this one, stronger actually than SoFi, up 20%. Really, really, I think the highs of the day are probably around 118 to 120. I don't know exactly at the moment, but
15,
APP
82.
very strong. Anyway, okay, so it's right there.
Right there.
All right. And Dash is another one, not quite like the previous two in regards to the nature of the gap, but showing some big strength today following yesterday's action. So Dash up 7% or so today on about a little over 100% above average volume. So some gap movers, and there's plenty of those today. Like I said, I'm going to go through some more of those on tonight's video. Additionally, Tim, I've been talking about this one for a little bit. ENPH is making a really big move today. One that recently had a massive gap on earnings and has kind of built a really nice little handle up there, if you could even call it that. But making a big move, I think a 3-bar break to the upside today. And then additionally, TAN, the actual solar ETF, which we own in Grotection, having a really nice bounce today, up about 6% with volume as well. So both of those acting well after about a week or week and a half of consolidation. And then another, I guess, similar sector to some degree, this lithium sector, Tim, that I've been talking about. LAC is the first ticker and the strongest in the group. This sector has not given a single opportunity, really. LAC has stayed on the 8. It's very extended. It's green today. LTHM is the other one in the space, but it's not quite the same caliber at this point in time that LAC is. So the lithium area is acting well, uranium, solar, really a lot of these energy spaces outside of the standard oil and gas, which also are acting pretty well today, continuing to show strength and maintain uptrends. So that's really all I've got today, Tim. Like I said, I got the video tonight. I think it'll be a good one, covering a lot of stuff.
Tell you what, in the final, just one more time, stock nerds. I was joking around a little bit. All you do is go to revereasset.com. You can get them a couple different ways. You can go to our YouTube page, which is Revere Asset on YouTube. Type in Revere Asset. You can subscribe. They get the moment we launch them, you'll get them right to your inbox, and we'll never spam you. Like, that's kind of our claim to fame, other than doing good work. Is just you're not in some sales vortex by subscribing to our our videos. We just send you the videos, the information you want, and so it's pretty easy there. And then we never pull them down. So if you want to do like back testing on what we do, all you do is watch the videos. Go backwards. Pick any moment in time up to like March of 2014. And see what we had to say about the market in that time frame. Or same thing with the podcast. We never pull those down as well. But Hunter's video is going to show up right here. It'll be next in line after the one I posted yesterday. And that brings us to the gentleman who only talks about stocks that go down on days that don't end in Y. Alex Katutis.
How are you guys doing? What's going on?
It's a lot of energy.
Surviving? Yeah.
Could
Dial
you
it back.
Could you come in with any less energy? Like somebody, what happened? Did you not have a protein shake? Did you not do curlies for the girlies? What the hell?
Curlies for the girlies.
What happened to you today? Get your dog to hit the wind button in your back. Somebody pour some oil and Small Wonder over. Come on, Alex.
I know what it is. Do you want me to explain it to you?
Please.
What has 2 words and 7 straight losses?
Go
Alex
ahead.
and Hunter's fantasy football team.
That's a low blow.
Wow.
Well, you know
not
I
wrong.
only deal in facts. I do only deal in facts, gentlemen.
Is that what's got you down, buddy? You got a case of the Cam Newtons? What's
It
going
can't
on
help.
over there?
No, I started getting I get migraines, and my left eye, I'm having trouble seeing out of it, to be honest with you.
Oh.
Well, just use your right eye, Alex. Come on.
Yeah. Anyways.
Now I feel bad for saying
that's-
that he had low energy.
That's
He's
right.
playing hurt.
All right.
No, I'm not making that up. I do get migraines. But
No,
anyways,
go ahead, buddy.
yeah, last night I put out a bonus stock video and kind of went over actually both of the stocks. Dutch Brothers and Affirm reported earnings, but before earnings, I talked about this last night on the call. Affirm shook me out. It was going down before the earnings on the poor Upstart news that Upstart had reported earnings the night before, and because they're both fintech, I guess people got scared and they sold that one down, and Affirm went down with it. But then after hours, last night, Affirm gapped back up. You could see that on the right side. I'm kind of in a do nothing mode on this right now. I kind of want to see the dust settle, and maybe the moving averages need to catch up. But I am willing to buy this back. I haven't yet. The volatility on these names are, I made the mistake of going too heavy, and it's just a testament. You could, doesn't matter how long you've been in the business, you're always going to learn something. And it definitely took a lesson yesterday that on a name like that with such a wide average true range, and if someone doesn't know what that is, that's you take the high and low of the day over a certain time frame, and that gives you an average price range that the stock will trade in. And if it's got a big average true range, your weight on that stock should be a little bit definitely smaller than you would typically trade on a stock that's less volatile.
What do you think? You're gonna help a ton of stock nerds here for just a minute. What do you think would be if you had to do it again? And in hindsight, what is the rule that you developed from this? Because you clearly did you take a loss on it? I'm asking. I'm not. This is
no. I sold a very very small gain on the stock. The options I did sell at a loss, but it hit my max stop loss on the options. The problem is
you honored your stop, which is, by the way, to be commended.
I had honored the stop, but the thing is this is like a very rare situation where it's not like I was holding this into the earnings. I was going to trim them yesterday anyways before the earnings call to de-risk. But the Upstart was a totally separate company that affected it. And, that just goes to show you could diversify and what have you, but that it was almost like systemic risk. You try to, the market will take everything down. This wasn't even the market coming down in the sense that Upstart just blasted the stock that, it was a very rare. I've never had this happen to me before where another company reports and then my stock gets hit. So I don't know if I could really, rules wise, I followed my rules. It just it happens. The market will find a way to.
Were you too heavy in it?
The position size was too big.
Too big?
That's what he was saying.
Yeah.
Okay.
What you want to do, what he's saying, folks, is the volatility of the stock and the range of the stock, the daily range, depending on how volatile it is, the more volatile and the higher beta, you got to trim the position size so that it's not as big as a stock that's a much slower mover. And I'll go you one better. When you set stop losses, you can't set real tight stop losses on a volatile stock. It's called a beta adjusted stop loss because just daily moves will shake you out and you'll overtrade. So a stock that's pretty volatile, you may need an 8 or 10% stop. And then for a stock that's kind of mid-range, it might be a 6%, and then a stock that's pretty docile 4.
Now, I know some traders, and now, again, this show was for what, Daniel?
Edification
research. Purposes only. Now, but I do know some traders, how they get around this particular issue. That's why I was kind of ferreting out what Alex had learned. He's genuinely helping somebody. I know he is, because every options trader has been what Alex just is. You can do the beta trimming, like, or you can, whatever the size is appropriate for you, you're going to risk the debit paid. Right, so if you paid...
Well, that's for options. I was talking about the stock.
Oh, understood.
Yeah.
So if you paid $500 for 5 calls, you have mentally committed
the $500.
The $500.
Yes.
And that kind of... That's not for everybody. Some people don't care to trade like that. But I know people that trim their size down.
I want to add something, too,
Please.
About stops. I would never... Don't ever put... This is me. You can do what you want, but... I don't put open market sale.
Hard
loss.
stops. No, absolutely.
Because on the open, the market makers, they could drop that bid down. They'll take that stock, and then you'll see it'll be up. I've had it happen when I first started trading. I was putting dead stops, and I wasn't at the desk all day. This was years back, and I come back. I'm like, how did I get stopped out? And the stock is up. You got to. It's called mental stops. You got to watch and have Revere Asset Management actively watch your portfolio for you if you have a real day job.
So there's an old adage on Wall Street for the market makers. You were talking about the market makers, Tim, that are setting prices for the stops. I mean, for the options. There's an old adage for the options traders on Wall Street. There's always the stops, meaning they know where the stops are, they know where the levels are, and so they'll actually manipulate that stock down just to clip all those stops hit, and then they'll start buying, and the stock goes right back up. So you want to either set alerts with your trading platform, or like TD Thinkorswim actually has an algorithm where it doesn't put the stop out there in the market. It watches it for you, and then it can put in a market order if it comes down to that level. So there's ways to do that.
Have you seen this? So
I had one more thing though.
Oh, go ahead. Hold on 1 second. Don't move on yet. Don't move on yet.
Okay.
This is to Alex's point about stops. Look at your screen, Danny. And Alex is spot on here. I want to kudos to Alex for bringing this point up that don't use market orders. Every trader that had the Tesla on yesterday morning, 999, like $1,000 stop, they walked it right down in the first 5 minutes, took them out, and then ran it right back up. And that's a function of what Alex was talking about. And I was watching that happen yesterday, and I thought, oh my gosh, I got to find a way to bring that up, and I totally forgot to do it. And then Alex is great.
Do not put your stops where everybody else has them.
Oh yeah, one other thing. What Don's saying is people think in round numbers or whole numbers, so you never want to put it at $49 or even $48.90 or $48.95. Use penny increments, odd numbers in between the nickel. So you want to do like $49.92 or 93.
What Don said, what everyone's saying here. I saw this happen on Tesla yesterday morning, and it was so egregious. And I'm like, oh my gosh, I got to figure out how to bring this up. So kudos, Alex.
The last thing was, I just wanted to go over because I'm very in tune with what's going on with the company. And I listened to the conference call with Dutch Brothers and went through the report. So they have right now, there's 500 shops or coffee shops, you want to call them, in the country. And they're planning on, they just put out some news that long-term goal is 4,000 shops. So that's an 8X projection. And based on a 49% year-over-year revenue growth rate, the company's market cap's $3 billion. They're gonna I think that this projection on a PE expansion price that I did too, they're going to be well over 20 billion in market cap. So this stock on the long term has the fundamentals based on these revenues and EPS. The chart's not looking bad to really have a good runway. Here's the thing, though: no matter how bullish you get, if the market goes out of a bull trend or an uptrend, like we call it here, doesn't matter how good the company is; it's going to come down with it. As there's an old saying too: a rising tide lifts all boats. Well, if the tide's coming down too, the boats are going to come down with it, regardless of what you own. So just have that in mind. It's nothing's ever a lock. I'm sure a lot of our viewers already know that. But I'm seeing a similarity in past stocks like decades ago with Starbucks and their rollout. And I did some math on their how many stores they have, and I tried to find out within the country how many stores they had, because they're global. Starbucks is all over the place. Dutch Brothers I don't know if they're going to be able to do that in the next few years, but just in this country alone, 4,000 shops is spectacular. When they said that number, that was a light bulb. That was a green light for me.
Okay,
that's it.
Awesome, man. Don, take us to Don World, where
Don World.
Yeah, Don World.
Don World.
Dan mentioned volatility adjusted beta. I talked a little bit about this in last Tuesday's video, and we continue to work on this in-house for all of our holdings, basically assigning something we call a Revere volatility factor to every holding that we have. That's a combination of the stock's beta and their average true range. And we assign a rating to them, and that allows us to calculate the optimal position size for the volatility that we want to handle for our clients. So as we progress on that, we'll talk more about it in videos. Affirm was a good example yesterday about how that made a 2.5 times average true range stretch move yesterday. So even though the beta is nowhere near would have reflected that, the average true range did. And coming up with these quantitative responses to the volatility in the market is what we've been putting a lot of time in-house. I also want to talk about a sector that's been beaten down that is coming off the bottom. Hunter alluded to this in one of his videos, but the cannabis stocks, MSOS in particular, is an ETF that we own that's acting very well. Seems like Republicans are coming around to the need to get tax revenue by any means other than taxes themselves directly, pointing more toward usage taxes. So there was some talk on Capitol Hill this week about that, and MSOS and cannabis stocks are reacting accordingly. So that's something else that we own in-house. And as far as the 2121 goes, I'll update that on Friday's video.
Well, it's interesting about the cannabis sector, which if we could get aligned in this country on a way to progress with cannabis and not make it illegal for banks to handle the funds from cannabis companies. Like, there's a bunch of industries that can benefit from
that. Yeah, that's what the legislation is geared towards.
Like, it's financial. It goes more than just like CGC or Tilray. It goes financial. Right. I mean, imagine a firm, buy your pot in 4 easy payments, no interest. I mean, like, you laugh, but that's where it's going to be going, right? And so
everything for that matter, Affirm's everywhere.
Yeah, like all the Klarna, Affirm, PayPal with break it up into 4 payments, Square, with everybody has the ability to do this. Which, by the way, is interesting. I'm not a cynical person, like in this regard, but there's a note out there today or yesterday. Americans are more in debt than ever before.
Really?
You're shocking, right?
It was a little surprised.
I know, they're right. And so
I thought over COVID they're always talking about people saving.
There's going to be a day of reckoning with all these buy now, pay laters going bad, right? There's going to be, I don't know if it's a day of reckoning or like...
talking about our government, or are you talking about for individuals?
Hey, 6 of one, half a dozen the other. Anyway, I'll tell you what, Daniel, I've got one last thing.
Okay.
But you got to do the normal. By the way, do the short normal closing, not the long one.
Is there a short and a long?
I thought there was a difference. Yeah, there is no difference.
Okay, all right.
I know. I caught it. All right, folks, listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. Tell them to sign up for our daily, what does it say there, Tim? Subscribe. Just subscribe.
Sorry.
And we'll send this podcast directly in their inbox and our daily market insight videos. We won't spam you in any way, shape, or form. It's up to you to reach out to us. If you want a topic discussed, if you want a complimentary portfolio review, or just have questions, you can email any of us, Dan@revereasset.com. That's me, the good-looking one. Tim at Revere Asset, Don at Revere Asset, or Hunter or Alex at revereasset.com. And you can always call us old school at 855-REAL-WEALTH.
I talked about it yesterday for a few minutes, the dollar and interest rates. I don't want to go back to it, and what that effect, I believe, has on stocks. And you can go back to the daily market insight. Like if you want to see, like Don was alluding to, that Hunter was talking about the pot, go back to Hunter's video. You can get educated. We try to make the videos, even though we produce them every day, there's some evergreen nuance to them, and a lot can be gleaned, I believe, from them. Also, one last note about Danny here in America, affectionately called America's Fiduciary. If you've got a bum annuity, meaning that we covered this in last week's show, don't be afraid to reach out to Danny. I'm telling you, Danny works miracles with people, getting them out of these horrid products. And if you don't know why they're horrible, 5 minutes on the phone with Danny, and you'll be like, oh, because you bought the equivalent of a financial timeshare. That's what you. And so now let's show you what I wanted to show you here, because I made a mistake yesterday. I promised. We had someone write in, hey Tim, can you show me your ATR chart set up? And I promised it at the start of yesterday's video. I actually said I was going to show this, and then I got so lost in my own thoughts during the video, I forgot. Even though I wrote it down and I mentioned it, I forgot. So here it is. Look, you have to implement these types of settings, okay? You have to find the Keltner channels, go to Edit Studies, search for Keltner channels, and then you've got to adjust the settings. Click the Sprocket, it's German, Sprocket. Click the Sprocket right here, and then you can adjust to be 1 in 21, 2 in 21, 3 in 21. And you do that a number of times, and what you get then are the 21 down there, and then you get the ATR charts all set up for you. But listen, there's a club to help you with all this stuff, and I'm removed from it, meaning that there's a great group of folks that follow our work at Revere Asset, and they talk about it offline. So there's a community growing outside of this show. Like I don't know where I'm pointing.
Revere Asset,
yeah. Like there's a community.
They're independent traders and investors.
And they're stock nerds and market lovers just like you, and they've got the white bar charts, they've got ATR charts, and they're discussing things when we're not with you. And it's really cool that there's a community discussing our work, and they're awesome folks. And if you want access to that, it's free. We don't run it. They're just great human beings. Just email me, tim@revereasset.com. I'll introduce you to Mark, Kat, and Dan, Catherine, a whole bunch of folks there that all they want to do is help stock nerds and market lovers get better and get better themselves.
We'll talk to you next week on Your Money.